I don't know. It just felt like last few times, like if you go back and try to watch it at all, or just YouTube, it's like I can just put it on in the background.
Gotcha.
And work on the worksheet while I'm listening.
Okay, we're starting chapter 7 today. This is going to be on inventory.
I'll be honest, I reread like the 3 waiting inventories, and I still was just like, I don't know.
The 3 what? Way to do it?
Inventory system.
Oh, yeah, well, I mean, it's kind of hard to understand until you get to where you're actually applying your methods to it. Okay, so just kind of some background on inventory. First thing we need to discuss is control over inventory. So, the last thing we talked about last chapter was shrinkage. And, shrinkage happens because of theft from the outside, from employee theft. It can be errors made in receiving, or, errors made in, if you have something that's damaged, getting it off the records, just different things can happen. So there's 2 primary objectives when you're considering control over the inventory. Safeguarding it from theft, keeping it in a manner that is going to discourage theft, and then keeping it safe from damage. You're going to want to store candles in glass containers in places where they're not likely to fall, things like that. And then the other primary objective of control is the reporting in the financial statements, because we want the numbers to be right. Okay, so these controls start as soon as the inventory is ordered. So remember this, because you'll see it again. When it is ordered, that's when the control begins. So it starts with a purchase order when the purchasing agent, who could be you if you have your own business, you call to order some inventory. You could be the purchasing agent. If you're in a larger company, you're going to have an approved vendor list. Well, even in a small company, there are certain vendors that have been vetted, they're okay to order from. There are certain vendors you don't want to order from. Maybe you've had trouble in the past. They're slow to deliver. They deliver the wrong stuff, whatever. So you want to stick to an approved vendor list, and a purchase order authorizes the purchase inventory. Then when it comes in, a receiving report is completed by whoever is checking it in. Whoever opens the box that UPS brings, they're going to prepare a receiving report showing what was in the box. So that shows the initial record of receiving the inventory. Then the receiving report will be compared to the purchase order. Did we get what we ordered? Did we get the right thing? And then once the vendor sends the invoice, you're going to compare the purchase order to the invoice. Because when you do a purchase order, generally you're going to have the price that they're charging you. That's kind of like your proof that they quoted you this price. I know in my grandfather's business, most I remember on these purchase orders is, they'll call to order some lumber, and the price of lumber's, up and down. So on the purchase order, they put the price on there that they're quoted the day they order it. So when the bill comes, you're comparing the two. And of course, this is all computerized for us, but you're comparing the two to make sure that they have charged you what they said they would, not more. Of course, if it's less, that's fantastic, but you don't want to pay more than what they quoted you. All right, so when you're doing this comparison, you're looking for differences, and once you fix any differences, if there are any, you're going to put this inventory in the books. You're going to record it. Okay, so control should have security measures like storing inventory in restricted areas that only authorized employees can go into. Vans, for instance, I'm sure in their warehouse they have certain people that can go in the area where all their guns are stored. and more than likely their guns are locked up in a cage of some sort to for security. So locking high-priced inventory in cabinets. So jewelry stores, they're going to have, you know, their jewelry locked in a case under a glass. They're not just going to have it out loose. You know, having security cameras, those tags that beep when you go out the door, security guards, you know, whatever. Just using measures to keep your stuff safe, discourage theft. Okay, so reporting inventory. A count of inventory called the physical inventory, that should be taken near the end of the year, because you want to make sure that you're reporting the correct amount on the financial statements, because there can be some pretty large swings in your inventory amounts. And costs of inventory are assigned once you got the counts, then you're going to cost it out. And we've got those 3 methods that we're going to learn for costing this inventory out. Financial statements. You know, we've talked over and over about the importance of the numbers being right on there. You don't want to, if you got a loan with the bank and your loan with the bank depends on you showing a profit, the accuracy of they're dependent on the accuracy of your financial statements. If you deliberately report the wrong thing, that's fraud. You can go to jail for that. But, you know, even accidentally, when I started with my grandfather's company, first thing I did was hire a new auditing firm for auditing our financials, because the previous accountant, he was great, but he was on his own, and that company is huge. So we needed a team. You know, we needed more than just one guy doing it. And he had made quite a large error in recording the adjustment to inventory. He had done it backwards, which made it double. So it was several $100,000 that he was off. And when he did it backwards, it doubled it going the wrong direction. So it was a pretty bad mistake and not something the bank looked favorably on. So, yeah, I rectified it, hired somebody different. But it can make a big difference. So it's important you report the right numbers. That's what I'm getting at. Okay, so this picture here is out of your books. Part of the reason I liked it because, you know, sometimes the visual helps you understand things a little bit better than just hearing it. So 3 methods that we're going to look at. The first one is called FIFO. That stands for first in, first out. And that's listed right here. First in, first out. That means when you're buying, you could be buying all the same item. Let's say, I don't know. What am I going to buy? What's something standard, generic? Something that doesn't expire. Boxes of tissues or something. Maybe you're selling Kleenex. Then what you're going to want to do is, of course, you know, if you're buying Kleenex at Walmart, then obviously you're going to take what's on the outside unless you dig around in the back and get something back there. But you've seen them kind of stock stuff, and they generally try to pull the older stock front and put the newer stock behind it so that the oldest things are sold first. So in that case, what came in first will go out first. You want the oldest items going out. You want them going out in the order they came in. So this is like it looks like a building, but it's, you know, a building or a box, whatever. Let's say you have a box and you have red, green, and yellow blocks. You put the red ones in first, then the green ones, then the yellow ones, and this just represents batches of purchases. Well, if you open the bottom to get out, you know, merchandise to sell, what's going to come out first? The ones you put in there first. So, because they're on the bottom, they're going to come out first when you open it. All right, so the next one is last in, first out. So that means the newest stuff will be sold first. So it's kind of the same concept. You throw the blocks all in a box, but instead of opening the bottom and getting what comes out the bottom, you're going to pull them off the top. So, you know, you're going to get the newest ones first. They're going to go out first. And then weighted average, this is what we used, and it kind of makes the most sense to me, but I think it's the least used in reality. And it all has to do with the effect it has on your financials. But what happens here is, okay, I buy batch number 1, and it's got a unit cost of $5. Well, I buy batch number 2, and what I'm going to do is I'm going to add the units together, find out, figure out how many units I have at this price, how many units I have at this price, and then I'm going to divide and average out my costs for all these units are going to have the same per unit cost now. So to me, it makes more sense because you're averaging it out where it's kind of more level. You're not having prices jump around so much. But, again, that's my opinion. FIFO is the most commonly used. And again, remember, this is a method of costing the units. This is not literally necessarily how the units are going out. This is what method they're using. Okay, at the end of the year, we have 500 of these. So, this is how we're going to assign a cost to these 500 units. It doesn't mean you go in the warehouse and literally the first 500 units you bought are still out there. That's not necessarily how they're going to pull them and move them out. This is just costing methods. Does that make sense? But, the picture kind of shows you, the order they're coming in, going out, but it's not necessarily literally like that with the actual units. All right, so with first in, first out, the first units purchased are the first one sold. Ending inventory is going to be made up of most recent purchases because you're clearing out the old ones first. All right, last in, first out, last units purchased are the first one sold. So ending inventory is made up of the first purchases. This is going to be something you're going to want to pay attention to right here because you're going to see it again. So, and then weighted average for every purchase, and when I say purchase, it's more than one unit. The average cost per unit has to be updated every time a new purchase is made. We're going to go through each one of these. All right, so there's your formula for weighted average cost per unit for later if you need it. There's a fourth method that can be used, but this is something that's like more unique. It's called specific identification. Think about that like car lots, and they're using VIN numbers. They're going to use VIN numbers to identify each unit. Those, this is used with inventory that's specialized, even a jewelry store. I mean, you can't, every item is pretty much going to be unique. So they're not going to bulk them together. You've got specific identifiers for each one. I like to use cars because you have a VIN number. So with, electronics, you have serial numbers. Even with refrigerators and stuff, I think you have serial numbers. So that would be a case where you would use, okay, we sold this item with this serial number. You're specifically identifying it, and that's how you cost it out. Okay. So let's do an example. All right, and we're looking first at perpetual. So we're assuming, we're keeping up with this. Every time purchases and sales are made, we are accounting for it. So all right, can y'all see that okay? Y'all with me? Y'all alive? Y'all kind of non-responsive. I know it's not the most entertaining subject in the world, but
Obviously, I'm dead.
well, you could be resembling a dead person. All right, so again, remember this is how we're costing these units. But if you can visualize this is how you're actually pulling them out of inventory, just to make it easier to wrap your mind around. All right, so we are going to calculate inventory using the first in, first out method. So this information we are given, we've got a beginning inventory purchases and sales for this particular item, XA 147. It could, I don't know what it is, it could be anything. So on August 1st, our inventory is 250 units, and each unit costs $6. On the 8th, we're going to sell 180 units. On the 15th, we're purchasing 165 more, and this time they're costing us $7 a unit. So, and then August 26th, we're gonna sell some more. So we're gonna go through this process of figuring out how much our cost of merchandise sold was on August 26th, and then what is our inventory at the end of August using this first in, first out method. Okay, this is a worksheet. Again, this is my worksheet. If this does not work for you and you have a better way of doing it that works with your thought process, use it. Because I don't want you getting confused by my worksheet. I've got a section for purchases, a section for cost of merchandise sold, and a section for the inventory balance. What the inventory balance is what do you have after this transaction? We're going to add this. This is what you end up with, and so on. So let's start with August 1. We started out with 250 units. That's what's going to go under your quantity. Our unit cost is $6. So our total cost would be what? How would you get your total cost? Do what? Yeah. What is it?
1,500.
You can do it. You agree? Okay. $1,500. Oh wait, y'all, sorry. August 1 is fine. I'm getting ahead of myself. I'm hoping y'all are writing in pencil. This is our beginning inventory. So 250 at 6. Sorry. 1,500. Why is I writing pencil? Y'all good? Since I messed you up when you get here. This is our beginning balance, so we're just going to enter our balance here. All right, so August 8th. We have a sale. So we're not going to put anything in purchases. We're going to put it under cost of merchandise sold. This is where your sales will go. We're only concerned, we're not going to do anything with a sales price or anything like that. We're just looking at cost. So we are selling 180 units. Now, what's our unit cost in our inventory right now?
$6.
Oh, we got $6 units, so that's what we got to use. So really, there's nothing to think about there. We don't have any choice but to use the $6 units. Okay, so what is 180 times 6?
$1,080.
Okay. So we started out with 250. We sold 180. So how many units do we have now?
7.
We got 70 left. This is going to be kind of like your ledger balance where you're constantly updating it. Every time a transaction takes place, you're going to update your quantity and all this. So each line is, updated for the balance. Okay. We're not going to end up at the end adding all these together or anything. We're updating as we go. Each line here should represent what do we have right now. Okay. So we got 70 at $6. So we've got 420.
Yes.
So now we have $420 in inventory. Okay, on August 15th, we are purchasing 165 units at $7. So we're going to show 165 units at $7. So how much is my total purchase?
$1,155.
$1,155 is the total cost of my purchase. Okay. So we got to keep up with each batch separately because we're doing first in, first out, last in, first out. FIFO, LIFO, you got to keep up with it. So we've got to keep these separate. So you can either do them on the same line or use 2 lines. It's up to you. But now we have 70 units at $6 for 420. And we have 165 at $7 for $11.55. So what would my total inventory be now?
$15.75.
You'd add them together, get your total inventory. But we've got to keep them separated by price. Can y'all see that? Okay. You wanted to total up how many units you had. You can do that too. 235. So we have 235 units now. Some are at $6, some are at $7. Okay, then on August 26th, you're going to have a sale. We're selling 140 units. So this is where your costing comes into play. Okay. We got a total 140 that we sold. But we've got to use up the first ones first. So on this sale, we've got 70 at $6. How many does that leave me to cost out if I'm selling 140?
70 at 7.
70 at 7. So your total being sold here is 140 units. Some of them are at 6, some of them are at 7. So our total cost would be $420 plus $490. And you could add them together and get 910. That's your cost. Aren't you glad there's computers that do all this for you? Okay, so now what do we have left? We sold all of these.
Give 95 units at $7.
Yeah, we sold 70 of that, so we have 95 left at $7. So what's my ending inventory?
$665.
So your answers would be, your cost of merchandise sold on the 26th is $910. And your ending inventory, we don't have any transactions after the 26th. So we're assuming the 31st balance is going to be the same balance as on the 26th. Okay, are you like mind blown or is it, you following it okay? You okay? It's kind of gross to me, but I mean, I get it, but still. And again, this is my worksheet. If this sucks for you and you don't like it, I mean, I've actually done visuals like where you have buckets. Like, here's your $6 bucket, and here's your $7 bucket. And you start with 250, and then you sell 180. So you have 70 left. Then you buy 165 here. So, I mean, you can do something like that if you want to. Whatever works. So, some people like the bucket thing. Some people hated it and liked the worksheet. Whatever. I don't care. Do it however you want to. You don't have to use my worksheets, what I'm getting at. But are you following the worksheet okay? Okay. All right, so example 2. Now we're going to use last in, first out. So when you're working these, you're going to have to kind of think about, like, what are you doing? Which units are you using? All right, so they want us to determine the cost of merchandise sold on October 26th and the ending inventory at the end of October. We're going to use these numbers here. We start with October 1 inventory. We have a sale, a purchase, and another sale. All right, so October 1. We're starting with 90 units. I barely touched that thing. 90 at 65. So we'll have, I was going to have all these filled out and didn't. Let's answer that one. Hey,
5,800.
58.50.
Yeah.
See, I've always got somebody in here that'll give me the answers. All right, so we're starting out with 58.50. Then on October 8, we're going to sell 75. Well, I mean, regardless of what method we use, we only have one batch in inventory, so we don't, that's not a hard choice. We have to use the $65 units. So our total cost of sales here is
$48.75.
$48.75. So that leaves us with 15 units at $65 and total. So I don't have to keep the pen in my hand to do them. Or someone else can do it.
70 cents, sorry.
No, you're okay. $9.75?
Or 975, I'm sorry.
All right. So now after that first sale, we're left with 15 of the $65 units. So we have a total of $9.75 in inventory. All right, on the 17th, we are purchasing 85 units at $71 per unit. So our total purchase is $6,035. Okay, so we're going to add that to what we currently have in inventory. So we've currently got 15 units at 65 for a total of $975. And then we have 85 units at 71 for a total of $6,035. So this is what our inventory is made up of currently. So we have a total unit count of 100, right? And then our total inventory cost at this point. And y'all pay attention when you're doing your homework, because sometimes they'll ask you for what's your inventory balance, and it'll be right in the middle of the problem. It may not necessarily be at the end. So just watch the dates. So we've got $7,010 in our inventory right now. Okay, so now we're gonna have a sale, October 26th, and we're selling 80 units. So I'm gonna put this 80 out to the side because we need to have a total of 80, but we don't know yet how it's gonna be broken down. Okay, so if we're using the last ones in to cost these out, which ones are we gonna use?
The $71.
The $71 ones. So they're all gonna come out of that last batch. So 80 at 71.
56.80.
Thank you. My calculator was stuck. 56.80?
Yeah.
Okay, so what does that leave me with? 5 of the $71 units and 15 of the $65 units. So we've got $975 plus $355. So our ending inventory would be $1,330. $1,330. Is this making sense? And again, I mean, if you any other way you want to do it, just figure out what works for you. You can do your own kind of chart if you want to. It doesn't have to be this. This may be overcomplicated. A lot of the methods I use to show these things came from ideas she said it was fine, so I didn't really steal them, I borrowed them. But I used her ideas because she'd been teaching a while, so.
Except for like, you know who she is.
Cherie Bergeron. And then on the next page, purchases, it didn't. I hate when I find things like that. It irritates me. I didn't have it stretched out right, so it didn't purchase this. I don't know the struggle of creating this crap. So that's what I need to know. If it's not helpful to you, then I need to do something different. This takes time. Okay, purchases. All right, so this time we're going to use weighted average. And again, this is not the most common. The other two, LIFO and FIFO, are most commonly used And I think the choice is determined based on how it best affects their industry or whatever, because your cost of merchandise sold is going to be totally different depending on which method you use. But, you know, from a tax standpoint, once you choose a method, you got to stick with it. You can't just arbitrarily change it without jumping through some hoops with the IRS. So you can use whatever you want to report to the bank for your book purposes, but with tax purposes, you got to pick something and stick with it. So
Internationally, LIFO is not allowed.
well, FIFO is the most common. So international doesn't allow LIFO?
Well, no, I think it was like IRFS.
Yeah,
IFRS doesn't allow LIFO internationally for most industries. But we use it most commonly in the US, so.
What he's talking about, if y'all care, we're communicating, but you know, it's probably gonna be boring to y'all. You know how we learned that GAAP is what determines how we do our rules. It's the rules we use to do financials in America. Well, everybody else in the world uses international financial something standards. I can't remember what the R means. They use this standard called IFRS instead of GAAP. So we still haven't, you know, drank the Kool-Aid completely and jumped in the pond with everybody else, because we have our ways of doing things and that's what we're used to. But the SEC, the Securities Exchange Commission, is working with that IFRS board, and we're trying to converge the two methods so that we can find something that everybody agrees with. Because the thing is, you've got maybe like Nissan or something that's got locations and plants in the United States and plants in Japan, and so you've got international here, American here. So just getting the reporting where it all looks the same is the goal of everybody using the same standard. But
it's okay, the United States still doesn't use a metric system either.
no, and you know what? When I was in elementary school, like 50,000 years ago, they told us we were learning metrics, that we needed to learn it because we were going to be going to it before long. Like 50 years later, 40 years later, we still haven't done it.
We still haven't made the correct choice yet.
Well, I mean, I could care less either way. I just want to stick with one or the other, but whatever.
Metrics are used to be used for most things. So.
Not for me, because I don't know it. I barely know the American system. All right, so October 1st, we're going to start out with, huh? What? Who said what?
Wasn't me.
110 units at 380. So what's my total inventory? Yeah, y'all be on
41,000.
I'll be on good behavior, because like one of our deans is walking around, our vice president. What is she now? It changed a lot. Did you say 41.8?
Yes.
It just changed a whole bunch of stuff.
Melissa
I think
Bowie's
maybe they are.
academic.
Huh?
Melissa Bowie's academic.
She's the academic dean, yes. I'm thinking, you know, they have vice presidents on every campus. So I think Carrie Cole's still vice president. It's just, they've just changed their coverage of what they're doing. So anyway, she's walking around. Don't make me look like I know. Let's see here. All right, so we've got 41.8 in inventory right now. Okay, so October 8th. We have a sale of 75 units. So again, this first sale is always going to be the easiest one, because there's nothing to choose from. So 28.5.
Yes.
Okay, and that leaves us with 35 units at 380 and
13.3 in inventory.
thank you. Okay, so now we're going to buy some stuff. It's October 17th. And we're making a purchase of 135 units at $410 a unit. So the total cost of our purchase,
55,350.
whoa, 55,350?
Yes.
I swear, y'all, I'm not touching that. I think I'm hitting it with my paper. 55, 350?
Yes.
Thank you. Okay, so at this point, we got to figure out what our new average cost is. All right, so I've got this down here to help you figure that out. All right, so we have purchased 135 units. Or you know what? It's the date. I'm sorry. We're going to put the date on here. October 17th purchase. All right, so we're starting out with 35 units at $380 per unit for a total of $13,300. Then we're buying 135 units at $410, totaling $55,350. So we're going to add our units together. We've got 170 total units now. You're not going to add anything here. We've got a total of $68,650 in inventory cost. You know, if we were using LIFO or FIFO, this breakdown is fine. But because we're using weighted average, we've got every time we make a purchase, we have to recalculate what our per unit cost is. And what it means by weighted average, we've got more units at 410 than we do at 380. So we've got to weight them based on the number at each cost currently. So you'll take your total price of $68,650 and you're going to divide it by the number of units you have.
Do you round to the nearest dollar?
Yeah, we can.
400.
404. So this is our new per unit cost. So at this point, we have 170 units at 404. Total $68,650. To me, it's a little trouble to calculate the unit cost, but then when you go to sell something, there's no question. You know, it's all the time. All right, so now we have a sale, October 26th. We have a sale of 125 units. No question about how much it is. We've only got one per unit cost. So 125 times 404 is $50,500. That will leave us with 45 units at 404. And 18,180. So the question is, just calculating it. Okay, so we're not asked a question, but you could, you know, give cost of sales at any point, any date. It's 8th to the 26th, and your ending inventory is going to be 18,180. That makes sense to everyone? Okay. So now we're going to look at the same information, but applying the cost 3 different ways. So you can kind of see what happens. Too tedious?
Probably.
All right, well, let's roll through it fast then. Okay. So we've got inventory sale, purchase sale, just like we've been doing. We're going to use each method. On this one, we're using FIFO. So January 1, we start with 50 units at $5. So we've got $250 in cost. January 5th, we're going to sell 35 units. $5 cost. So that leaves us with 15 at 5. It was 35 times 5. 70, 140, 175.
Yes.
And this is 75, right? Y'all follow what I'm doing? Okay. So January 10th, purchasing 80 units, $7, $560. So now we have 15 units at 5, and we have 80 units at 7. So we have 95 total units, and our cost is 75 plus 560. So it is 635 total cost in our inventory right now. January 21, we have a sale. We're selling 47 units, and we're using first in, first out. So we're gonna have to break this down. So we've got 15 units we're selling at $5. And then we have 32 that we're selling at $7. So our cost is gonna be 75 plus 225. So our cost is 300.
Like, no,
No,
two from, what?
I said 225. Not wrong.
224. I
224.
was like 300. I got 299.
224. Okay, so we've got 299. So we don't have any of these $15 units left now. We've sold them all. And we've got 80 minus 32 of the other ones, so that's 48. At $7. So how much is that total?
336.
336. Thank goodness we're using simple numbers. Now we're going to use last in, first out. So we've got January 1, January 5, January 10, January 21. All right, so we're starting out with the same thing. 50 units at $5 for $250. We're going to make a sale. The sale is going to be the same thing. 35. We only have $5 units. So for each one of these, this part's going to be identical. It's when you start purchasing that it starts throwing things, purchasing and reselling. So on the 10th, we have a purchase of 80 units at $7 for $560. So now we've got 15 at 5, and we've got 80 at 7. So we've got a total of 560. We've got 75. So we've got 635 here. All right, so now we've got a sale, 47 units. So because we're last in, first out, we're going to take them from those newish units. So we're selling the $7 units. So 47 times 7 is 329. So of these 80 units, we have 33. We have all 15 of those original ones. So our ending inventory is going to be 75 plus 21. What's 33 times 7? 81, 81.
I just do it all together. I'm sorry.
Okay. 231. So your total inventory is going to be 306. So I mean, already it's only $30, but we're using really small numbers. Okay, last one. Honestly, you can copy everything down for the first 3 transactions. So now we have 15, 80. No, actually, we gotta refigure it here. Okay, so when you get to this purchase, we're gonna go in here and take, this is our purchase on January 10. We started out with 15 at 5, or 75. We bought 80 at 7 for 560. So now we have 95 units. We're not gonna put a price per unit there because we gotta figure it. 635 total. So we're gonna take our 635 and divide it by our number of units. So our new cost per unit is how much?
6.68. Roughly.
Yeah, so we'll say 6.7. We'll say we can use 6.68, it doesn't matter. All right, so now we have 95 units at 668. So our total inventory is 635. So when they have this next sale of 47 units, we're selling them at 668, and we have left 48 at 668, and you'll just multiply that out. That's not right. $313.96. You could round it.
See, it's not 314 with us.
And then what you have left is like 320.64. Which you can see, we got 306, we got 321, and 336. We got three totally different numbers. And again, these are small numbers, but when you put it on a much larger scale, it can make a big difference. So, all right.
How's it gonna be one set with you for raise or you know, if you're
On the test?
probably the same set nine.
Look at it.